Good morning. I'm Larry Getlin, head content writer for the Commercial Observer, and it's my pleasure to open today's program, CRE 2022, Real Estate Trends to Track. Today's expert panel will provide a deep dive into location analytics to break down the biggest trends affecting the retail and office real estate markets. From shifts in consumer behavior to work from home and omnichannel, this morning's discussion will analyze and highlight the key factors that will drive success and traffic in 2022. Before we get started, I would like to thank our program sponsor, Plaza AI. If you have any questions for today's speakers, please enter them into the Q&A function at the bottom of the control panel, and we will set aside time at the end of the discussion to address as many questions as possible. Also, you'll receive a live poll at the conclusion of the panel asking if you'd like to connect with any of today's speakers. If so, then we'll pass your contact information along to the speakers you select. It is now my pleasure to welcome today's panel. Our moderator for today will be Ethan Chernovsky, Vice President of Marketing, Placer AI, and he will be joined by Daniel Klein, President of Klein Enterprises, and Brian Roach, Managing Director of Atlantic Retail. Ethan, the floor is yours.
Thank you very much, Larry. It's great to be here. Thanks everyone for being with us today. We're really excited to be doing this. I'm slowly speaking so that I can get my deck rolling as we go. And there we are. So CRE 2022, the trends to track. What we really want to discuss today is what are the big elements changes that we're seeing? What do we expect in the coming year? And to get the discussion going around what this could all mean as we head into 2022. I am incredibly excited to be joined by two guests who need no introduction, but I will give it anyway. First, Brian Roach, the Managing Director of Atlantic Retail. Brian, thank you so much for being here.
Thanks for having me, Ethan. Can everyone hear me okay?
Yep, you're coming in great. And Daniel Klein, the President of Klein Enterprises. Daniel, thank you for joining.
Thank you, Ethan and Brian.
And it's extra exciting because over the last few days, we actually got to see other people at a commercial real estate event. So Brian and I actually got to hang out. So that's the exciting thing that we get to discuss here. But a quick introduction to Placer for those of you who are unfamiliar, to get a sense of some of the data you're going to be hearing and seeing today. Placer is a location analytics platform. In the simplest form, that means that people vote with their feet, and we're showing you how they vote across the United States every single day. We do that by observing a panel of over 30 million devices. This is all anonymized aggregate data, so we are GDPR and CCPA compliant. We then utilize AI and machine learning algorithms to analyze that data and present it and run estimations to retail locations anywhere in the US. And we present that information in our platform in a wealth of different reports on everything from visit counts, true trade areas, void analysis, traffic routes, and a whole lot more. If anyone is interested in checking out Placer and isn't familiar yet, we have a free version of the paid product on our website that you can access at placer.ai, or you can check out a section of our website that has a bunch of free tools that we put there in a section called The Square, and that's at placer.ai-the Square. And now what we're really here to talk about, the actual content. So I want to layer this or set this up in two ways. We're going to start by looking back and then taking a look forward based on that look back. So we're going to start with an analysis of things that we've seen. And the most basic is that we've seen brick and mortar retail recover really strongly. And this is an overall look at the retail category that includes everything from grocery to apparel. So there obviously are stronger and weaker players within it, but nonetheless, in an important kind of overview. And Daniel, I want to start with you here, especially when you think about how difficult the pandemic hit. And the fact that even pre-pandemic, we had this wider retail apocalypse narrative. How do you kind of contextualize or understand the retail recovery that we've seen?
Yeah, so I think it's been really difficult this year to try to identify, what is true recovery versus what is just people normalizing behaviors and coming out of prior years in terms of changing what their habits are. I think when you first sent me this slide deck, I was amazed to sort of see the growth in the second half of this year in terms of the increases in weekly visits. I think what we're finding is, as society starts to normalize and come back, people want to get out and they want to socialize. And for socializing the world today, is going to shopping centers, going to retail stores, and getting out and doing things that we weren't able to do before. And so I know we see it in our portfolio as we look at the data, and visits are up across the board. And I think it's a positive sign. And I think that, we're optimistic about next year in terms of being able to look at the real data year over year in a more normalized environment. But retail is definitely not dead. Our sales for a lot of our retailers are significantly higher than they were in 2019. And we're excited about the potential for retail to be sort of a catalyst for socialization in the world today.
I think it's a really important point, and maybe even more. How excited are you to talk about year-over-year metrics again? Because for me, this 2019 comp thing, it kills me a little bit inside. But Brian, I want to go with you. When you think about everything you saw and how kind of the world's evolved, especially in the last kind of few months, are you more or less optimistic about brick and mortar's role in retail moving forward?
Listen, we've always been really bullish on retail, and brick and mortar retail in particular. I've been one of the folks pushing back on the retail apocalypse narrative for a long time now, and I think the pandemic has proven us, I think, largely right. Brick and mortar retail is going to play a critical role in retailer strategy of reaching their core customer base and delivering goods and services. And it's as critical as ever. We discovered that in COVID, and I think there's three factors that really highlight that. As we'll talk about, I think a little bit later on, e-commerce and DTC brands were already pre-pandemic trending towards adding physical retail as a part of their overall market strategy. COVID did nothing to change that, did nothing to slow that down. That's still a driving force in commercial real estate today. And while e-commerce is a growing portion of the retail pie, the vast majority of transactions are still taking place inside physical stores. And even more surveys that we've read show that customers like having a mix of options and different ways to interact with their brands, oftentimes using mobile applications to enhance their shopping experience while they're in a physical store. So that's always been a long trend. And I guess my final point is there's really nothing like being tossed into the deep end of the pool and told how to swim. And that happened to a lot of brands and a lot of concepts during COVID, facing previously unimaginable operational restrictions. And they did what they've always done through whether it's the 08-09 cycle or the rise of e-commerce. Retailers have adapted to survive and to keep delivering on their mission of delivering goods and services to customers. So it's safe to say I think we're pretty positive on brick and mortar retail right now.
I think it's a great point. I also feel like we'll discuss this a little bit more. There's adapt to survive in some cases that makes you do short-term strategies, but it feels like the pandemic specifically, has pushed people to evolve in a way that's actually better for their long-term growth. And I'll call this out a little bit later, but a great article in the Wall Street Journal, I think came out yesterday, about how retail is better positioned maybe than ever because of things like, you think about the holiday season, you're seeing retail numbers go up, even though people aren't slashing prices anymore and they're thinking differently about the experience they provide. I think there's a potential for a net gain off of this, which is really interesting. And I don't think we expected, a year and a half ago. But moving to kind of sectors that impress, and Brian, I'll start with you here. I actually have, I have the same question for both of you on this one. And it's, give me one sector that impressed you in recent months and what you think the wider takeaway is for the retail landscape. And Brian, let's start with you here.
Yeah, listen, I think it'd be really easy to say, home improvement, grocery stores, right? I mean, these are concepts that were deemed essential and had record-breaking years. In a lot of ways, couldn't believe the good fortune that came upon them. But I think about this question, what actually the sector really impressed me was actually the restaurant industry. I would say outside of healthcare, no single industry has had more obstacles to contend with in the last 20 plus months. Whether it's government regulations, which varied from state to state, operational restrictions that not only reduced customer counts, but also forced you to make big cash investments in an already tight margin business, right down to the overall stigma in the public and in the media that your business contributes to a public health disaster. Oh, and by the way, let's throw in a labor shortage and rising prices. Yet by many estimates, 90% of restaurants have managed to keep their doors open. And they've adapted. They've worked on different ways of delivering their goods to their customers. And I think what we've seen, as well as a stronger demand, in places, and I think we'll talk about this a little later on, restaurants are back, where as long as they're allowed to operate, people are coming back in the doors. So that sector really did impress me.
That's a great one. And Daniel, same question to you. Sector that impressed you and what you think the big takeaway is.
So first off, Brian, I love your answer because I wouldn't have expected that. But not enough attention has been paid to sort of the entrepreneurial grit and resilience and determination and frankly, innovation from a lot of the restaurateurs, both big national chains, fast casuals, but even restaurateurs that have 1 or 2 locations in terms of just having to adapt and get creative in order to succeed. And so I love that answer. Mine was actually literally stealing Target off of this sheet. And the reason it was because when you sent this data over, I wouldn't have thought that I would have just, instead of sector, just said, wow, Target has really been amazing. But in my own family, in our home, and I realized early on during COVID that there was a psychology behind people not going to 3 or 4 stores because it would increase their exposure or their risk. And so a place like Target, where you could get groceries, you can get clothing, you can get dry goods, you can get electronics. I think that has allowed them to thrive and succeed because, people can go to one location, get a lot of different things, but also, sort of Brian talked about technology a little bit earlier, the brands and the companies that have a great e-commerce presence and technology and applications to make it easy on the customer to shop are going to continue to succeed and continue to thrive. And I think Target has been a great example of that.
Great example.
Jump in real quick. The Target's been a long time client, so I'm sure they'll appreciate hearing that answer from Daniel. I think one other larger takeaway that I would probably stress is one of the things that we saw in our deal making was almost an unprecedented level of transparency between landlords and tenants and cooperation of saying, hey, listen, there's no playbook for this, right? This is unprecedented in stop me if you've heard the word unprecedented times at all in the last 2 years. But there's no playbook for it, and it really hasn't happened in the history of modern retailing. So landlords and tenants working together, I think, really staved off a large wave of vacancies that we would have otherwise seen. So that's a bigger takeaway I would look at.
It's a really important point. I actually think one of the things that we're not talking about enough is maybe there are those who are, but how do we utilize this moment in time where kind of those walls have come down and there is more transparency in the interaction to start solving other problems? Because we talk about, give an example that you both brought up was, e-commerce, omnichannel. We have to start figuring out what role does the store play from a metrics perspective in actually those numbers. And if we don't, it's going to end up hurting the retailers in the long term, and it's going to hurt the landlords in the short term. And utilizing transparency to come up with some sort of solution there is so important. But I do want to go to some of the areas that were kind of unexpected successes. And Daniel, I want to start with you here, and a more kind of philosophical view. And like, how do you see things like these, the things you didn't expect to do well that did well? And so, do you understand it as, oh wow, there's a change in the underlying strength. Wow, this is something I didn't expect to do well that's actually has power that I didn't realize? Or is it, it's a short-term moment in time, good for them, but it's going to go back to struggling, in a little bit. How do you make that kind of differentiation?
So I think it's really difficult right now. And I think that it sort of references, your sort of joke before about getting excited to go back to year-over-year data analysis. We talk frequently in our office about sort of, what is a normalized environment coming out of COVID, right? And I don't think we really know. We don't know what the patterns of behavior will be and I think that getting another full year into 2022 of full data to see, where the anomalies are versus what our systemic shifts are really important. And I think it's different regionally, right? Different parts of the country have different rules and regulations. And I think that this is where sort of, area expertise comes into play, right? We have most of our real estate is in the Mid-Atlantic region of the U.S. We have a few million square feet of retail. We know the neighborhoods, we know the political environments, the regulatory rules that are in place. And so it's easier for us to evaluate here than if we're looking at an asset in North Dakota, whereas we don't know what the patterns of behavior are. So I think it's really important for people to understand the environments in which they're working now, as it relates to retail, maybe not other asset classes, to be able to figure out sort of, where we're headed and what the long-term trends are, not just these short-term shifts.
I think you're dead on, and I think that interplay is so much more challenging than ever before, because that local environment has so many variables at play that we've just never seen before. They may be short term and they may be long. There's just so much going on that ability to see things in each area for what it kind of that brings to the table is so important. Brian, I want to ask you, is there a sector or retailer that has really surprised you as an example of one that, I didn't know that this brand could do well in this environment, and wow, they've actually done really impressive things.
Well, listen, I think I probably would say restaurant industry, right? And I think that kind of did surprise everyone when you look at kind of how they performed. And I think one of the things that really surprised me about that that we've learned more recently, and I was looking at some data from OpenTable. They're looking at reservations in full service restaurants, and in states where regulations have been reduced, they're back to 2019 levels of activity in those locations. And I think what I find a little bit surprising about that is not that the concepts are strong and desired, it's that the public was willing to come back, right? The public was willing to go back, sit in a restaurant, sit in a crowded restaurant, and they were willing to do it really fast in those places where those restrictions have been lifted. So that did definitely surprise me a little bit. I mean, when the pandemic first hit, internally we were having discussions and we're bracing for 0809, right? We were expecting, that there could potentially be a wave of vacancies, opening up all kinds of either opportunities to transact or, creating challenges for landlords. I don't know that we were all expecting so many people to be flush with cash and the ability to work from home. I'm no economist, so I'm not going to talk about like a K-shaped recovery and all of that stuff, but you had a lot of folks who did have that cash and were all of a sudden putting a deck on the back of their house because they wanted to be able to hang outside. So you couldn't get lumber at Home Depot. That was all really, really frustrating and surprising in a lot of ways for us. So,
I mean, it's such a good point. It leads perfectly into the next slide, which is we're going to talk about kind of the unique challenges and opportunities that have been seen. And I think one of the ones, and Brian, you just mentioned this, and I'll start with you here, is we talked a lot about labor shortages in recent months and like, how do you fill people? Do you feel like there's two elements here? There's the short term and then there's the longer term. Do you think this is a sign of things to come, that these labor shortages are going to continue and it's something that brands need to start really strategizing around? And how do you think the sector can respond?
So it's a good question, and it's probably not one that I'm fully qualified to answer. What I would say is it's very much real. It is a real thing. It's out there and it's impacting retail real estate as we speak. And Daniel can speak to it a lot better than I can about how it impacts things like construction costs and timing. We are seeing, it's not blunting in any way any of our clients' demand for deals. I think that their appetite to grow is the same. They're looking at, doing things like, purchasing equipment in advance and kind of sitting on it so they can meet, those lead times for stores that are going to be opening 8 to 12 months down the road. But they're not looking at saying, I can't move forward with this deal because I can't staff it. They're not having those discussions today. If something like that were to continue, and obviously it becomes a challenge, it impacts their operational model, but I think it's still really too early to say. We're not, completely done with all of this yet to understand, was it, the great resignation, right? All the folks who are now using this as an opportunity to change careers. Is that a short-term thing, or are we going to come back to normal? I really have a hard time saying it. So I think the sector has to just be able to be nimble, leverage technology where they can to have their models be operationally efficient and frictionless for their customers. But it's still tough to say about what the long-term ramifications are going to be.
It's a great point. Daniel, I want to give you, you can touch on the labor shortages too if you want, but I want specifically the other one that was kind of, so it was labor and it was supply chain. Those were the big things that we were really talking about. I think one of the things that have been interesting is that, and we mentioned this before with the journal of like, prices have been higher and in some cases stayed higher. We saw that the holidays is a great example. You don't see the slashing of costs, yet people are still buying, and they're buying in a really large way. And so some of these challenges actually create opportunities. So I wonder from you, and again, please address the labor as well if you'd like. How do you find the positive in these situations, and how do you try to adapt to it?
Sure. So on the labor shortage, briefly, it's absolutely an issue, and it's not something that's just sort of in the news. On a micro level, I was with a friend yesterday who owns a number of restaurants in the Washington D.C. area. His GM of a restaurant just gave notice that he was resigning, and they have a lease renewal coming up, and so they're making the decision: do we even try to find another GM, or do we just close it down because the lease is up? We've been here for a long time, right? And I think in a normalized environment, you just find another GM because it's not a problem, because people are there and people are available. And again, this ties into, we are not in a normal environment still. And hopefully we're getting there, but everyone needs to continue to expect the unexpected. On the supply chain side, it's hard to put a positive slant on the supply chain issues. I think you can still have positive outcomes in light of the issues, right? Retailers can still do well, even if products are costing more. We have a lot of retail, we have a lot of multifamily as well. Multifamily rents have increased substantially across the country because there's a shortage of housing, and so that way, if it costs a little bit more to build something or it takes a little bit longer, you still have that demand to rent product, right? On the retail side, Brian sort of referenced, people building decks in the back of their houses because they're spending more time at home. I think a lot of it just sort of, aside from the economic stimulus, a reallocation of dollars, right? Someone, didn't spend money going on vacation and they have an extra $10,000. If a television costs $1,200 instead of $1,000, there's that analysis that's being done where maybe they've still been able to save some money, right? So I think a lot of this ties into sort of reallocation of dollars and capital, and also how people are making holistic life decisions coming out of this in terms of where they want to spend their money and how they want to spend it. And, I think a lot of people realize, life is precious and they still want to live it. So if there are some minor cost increases, they're still going to spend the money for the things that they want in their lives.
It's a great point. Another area that I think has been really fascinating to me is kind of how quickly routines returned and how significant routines are. And so one of the things that, in the midst of like, oh, the pandemic is going to change everything, or, 2020 spring, one of the things we heard is that, people's behaviors are changing, and that's it. They're never coming back. So that when they go to work, how they go to, what they expect, from certain things is changed and changed forever. And I think there's a degree to which that's true. I mean, work from home being a fantastic example, but I also think it got somewhat exaggerated. So even work from home, we're never going back to the office. I mean, that's not true. We are going back to the office. We're just going back in a more flexible format than maybe we did before in some cases. And so, Daniel, I'll start with you. I think we expected this long and fundamental change to consumer behavior, but in most cases, we haven't really seen it. What does this tell you about the sustainability of consumer preferences?
Yeah, so this one was also interesting to me also, right? Because you look at this slide and you look at sort of the direct analysis in terms of how much time people are spending at grocery stores and when they're going, but you're not looking at the frequency in which they're going, right? Which is earlier on, the numbers, it was 20% higher, more visits to the grocery store than there were 2 years prior, right? So if you factor that in, the routines have changed, right? It's the number of people who are going to the grocery stores, but it doesn't mean, if you have twice as many people going, it doesn't mean they're going to start going at midnight instead of at 10 or 11 in the morning, right? They're still going to go at sort of a normalized time. I'm big, and I talk about this frequently. I look at our office, there are 20 of us here. Some people are here 5 days a week. Some people are here 2 days a week. Some people are here 3 days a week. It's all different than it was 2 years ago. And these routines are absolutely changing. And I think that, people are creatures of habit. And so we're not going to see seismic shifts on the average individual and looking at sort of their activity at shopping centers, right? And if someone goes grocery shopping and they used to go once a week, but now they have the freedom or flexibility to go twice a week, they're still likely to go for the same time and around the same times. I think there's going to be little tweaks in terms of what the routine behavior might look like. And I think, again, as we have more data over the next 6 to 12 months, we'll have a better understanding about sort of what the new routines are.
It's a great point. And I think we talked about this a lot. It's small but significant shifts. So you're not going to see nobody goes shopping in the evenings anymore. They only go shopping in the morning. but some people will, and those people have more time potentially to spend, could be a much more substantial trip. And I think that's what's always fascinating to me is how do you incentivize those behaviors that are actually positive for you as a retailer or as a shopping center? I mean, but Brian, I want to ask you, are there specific behaviors or shifts that have taken place that you expect to continue? Are there some that, is there one that like really stands out to you as, oh, this is a change that this is going to be a long-term shift?
Yeah, I mean, it's a great question. I think as Daniel alluded to, we're still, right in the final chapters here, right? We don't know what the final, fallout's going to be in terms of commuting patterns. How much are people going to be working from home? You hear about the hybrid model of the 2 days in, 3 days off, or, everything's going to be changed, and that changes where customers are every day and what's convenient for them and what their shopping habits are going to be. So I think we're still learning a lot of that. We got, a little ways to go. I do think it's safe to say things like buy online, pick up in store, curbside delivery, hopefully outdoor dining, those sort of things I think are going to be here, for the long term. Consumers really, really love them. They like the frictionless shopping experience. I think that's going to stay. They like that convenience and those opportunities to interact with their retail brands in those ways. And I think developers and retailers are going to design their stores to better accommodate that. You looked at certain retailers that you saw that now started considering drive-through options in the suburbs that they may have never considered before. That may not have made sense. So, why would we want that? But now it's a little bit easier. It's a little bit more. It's less friction, less contact that you're going to see. So I would expect some of that. We may start to see suburban, urban. How's that going to play out? We definitely saw suburbs recover a lot faster in a vehicle-centric world where drive-through was an option, and people could go to open-air shopping centers, and they were at home. They weren't in their office. I think in a lot of urban spaces, occupancy levels are as low as 30% in some spots, just because a lot of big companies with white-collar employees are able to say, yeah, we don't need to come in right now. We'll figure it out down the road. You mentioned a little bit on grocery stores, Daniel. I mean, I think it was in 2015, you hit that inflection point, right? Where more dollars are spent in restaurants than they were at grocery stores for the first time in history. Well, that obviously all changed, right? Grocery stores saw, I think, an 8% increase in their sales, and restaurants a 30% decline. I don't think that's going to be here for the long term. I think that's going to rebound as people come back, as some of the data that we're seeing. So I think that will likely come back to the norm, because I think the demand is there. And the underlying, economy didn't suffer the cataclysm like we did in 08, 09.
That's a great point. I want to get to a really great question just came in, and I want to address it because it's kind of within the flow. There's been some other great ones that we'll make sure to get to as many as possible at the end. But someone asked, as consumer behavior has changed coming out of COVID, what is the single most important metric that you're going to use to monitor the health of your retail partners? Daniel, you want to start with this one?
Sure. I think the most important metric that has always existed has been sales, right? And having the ability for a tenant to report sales to us, which, frequently tenants have great brokers like Brian representing them, and they sort of negotiate that out of the lease, so we don't always get sales, right? But where we can get them, that's the greatest benchmark for us, as to sort of be able to see not just the one retailer, but how all the retailers at a shopping center are performing, and sort of the relationship that they have with each other. Ethan, not to give you guys a plug, but where we have sales data, we frequently reconcile it with the placer data that we have to try to figure out what the collective performance is. But it's a great question, and I think sort of having the open lines of communication, like Brian talked about before, with retailers and the landlord-retailer relationship, being able to have those conversations, also to hear what the retailer's perspective is important, because things are changing. And one of the things I wanted to ask Brian about before, right? Because there's another question that someone asked about sort of more home cooked meals, if people are working from home, and if that's a grocery bump. The big catalyst for a lot of fast casuals and daytime restaurants is what's the daytime population based on the surrounding in the submarket area. But if there's a hybrid model, how are you determining what the daytime population is, right? If half of that population is at home half the time, right? How do we then figure out where the behavioral shifts have taken place to figure out what tenants it's impacting or isn't? And at the end of the day, again, it comes back to if we're getting sales reports and we're have open dialogue with our tenants, we're getting that information to find out who is getting the bump and who isn't.
Yeah, it's a great point, Brian. Do you want to address Daniel's question?
Yeah, no, we're not going to normalize sales reporting on this call. But you're right. I mean, it's retailers are in this. There is one metric by which you're all measured, and what is the performance of your stores. So, and every retailer obviously is looking at that, but I think they're looking at it in a few different ways beyond just the overall numbers. What does our trade area look like now? Right. So where are our customers coming from, and how can we find the best ways to interact with them? And I think one thing a lot of retailers are getting, getting a lot of access to through the growth of mobile applications is really unprecedented customer data, not just the kind of data that folks like Placer provide, but they really get real insight into their customers and the different ways they're going to reach them. So I'm actually excited to see how they're going to employ that data, not in a Big Brother sense, but really be able to dial it in. One of the things that I'll mention, I'll plug Target again, that they like to talk about in their flex format stores is being able to curate their product mix to the market that they're in a ways that large format retailers were never able to do before. And that all just comes back to the data they have available. So
it's a great point. It's one of the biggest things we're seeing, by the way, not just in retail, but in CPG as well. This idea of how do you focus on the specific market you're in and make sure the right things are in the right place for the right people? And it's the right way to succeed. I mean, it's not a very complicated concept. It's very difficult to deliver on. But now I want to switch to looking a little bit more forward. And I want to start with kind of trends that we're really kind of focusing on. And I want to get through as many as we can. I don't know if we'll get through all of them, but one of the big ones that we've been talking about quite a bit is this idea of the great regression. And by this, we mean, I think, home improvement we talked about before, so it's a great example. We see Home Depot and Lowe's kind of numbers absolutely skyrocketing at the heart of the pandemic. Essential retail, we're all at home, we're doing these projects, we realize we need a porch, we hate our couch, whatever it may be. And you see that incredible rise in traffic, but it starts to drop significantly. And I think what's interesting is that overperformance or extreme underperformance leads to the potential for misconstruing the data that comes after it. So, you see Home Depot visits down year over year, even though they're in a stronger place than they were pre-pandemic. It just rose so high that it was impossible to kind of sustain that. And Brian, I want to start with you here. And I think when you think about those brands that overperformed or the ones that got hit really hard, there is this wider sense that this kind of regression to the norm is coming. How do you make a decision about chains in this environment? How do you contextualize? Well, that jump was a little bit unfair because they were given all these opportunities. We need to expect something different. How do you go about doing that?
Well, I think the way you just described it in intro, it really is the answer. We all know it, right? We all understand it. This is not it's not a mystery as to why some retailers have really performed and others have struggled, because it is really, really black and white. And I think that as we continue through, hopefully into an endemic phase of where we're at right now, and things will start to level out, we'll understand where we're at. And I think just speaking of other market cycles we've been through, as brokers, when we're deciding on the types of retailers that we want to partner with, or how we want to advise owners of real estate on what deals to do, where to make investments, and who to try to attract to their centers, you have to take that long view, right? You've got to look at this and realize that in market cycles, there's going to be ups and downs, but more often than not, it will come back to the mean, and that these are short-lived. Now, if you happen to see a trend, which we saw in other concepts, as we've seen for years, that there's a declining sales year over year, you kind of understand what that means, and you do react accordingly. One of the things that I think we were expecting to see out of this, like we did in 08, 09, was entrepreneurship and new concepts on the rise. And I think we'll talk about that a little bit later on. But 08, 09 gave a large number, put a lot of square footage back in the market, right? And it gave entrepreneurs the oxygen they needed to go out there and find new concepts to build a better mousetrap. It didn't happen as much here. I mean, there were absolutely vacancies, there were store closures. I don't want to minimize any of that. Those were real jobs that were lost. But it was not the cataclysm that we thought could have happened, when we were sitting here 18 months ago. So you just got to be even keel, 360-degree view, recognize that we know what's driving either the success or the failure, and react accordingly.
I mean, and Daniel, I want to ask you kind of a different version of a similar question though, but you think about these regressions and, take I find AMC to be absolutely fascinating. I find the fitness sector to be fascinating too. These are the ones that really always pop for me. We think about that positive regression back. What are you doing to kind of speed that up? And I think the landlord perspective is so interesting here, because what are the steps that you're trying to take to either advise them on how to do this or help in your own way for these sectors that they're coming back? How do you ramp it up and make it go faster?
First off, I don't know if the people on the webinar can actually see the numbers on the AMC and the fitness data, but this is amazing to see, right? AMC is up 285% in October year over year, right? And we're talking about Home Depot regressing because they're down 2.8% off of what probably the October before was one of their greatest Octobers ever, right? And so if you actually looked at the number of people instead of just the percentages, I wonder if AMC is up 285% because they had 1,000 people going to a movie theater a year ago, and now it's 285,000 now, but it's still below the millions they were getting, right? And so I think more than anything, I keep talking about how we need to get another full year in to see where the data is. Comparing these changes to 2020 it's so impossible to figure out where the trends are. All I know is, I look at my own life. My 10-year-old daughter went to a birthday party at an AMC theater on Sunday. 12 months ago, I know if the school had heard there was a birthday party, the school would have been shut down for a week afterwards, right? So we know the patterns of behavior are evolving and they're changing. I think just in general in AMC and fitness, you have the concerns about technological innovations keeping people in their homes and not going out to those types of retailers. And again, retail has always been a case of survival of the fittest in any environment, right? And you're going to need the fitness chains to adapt and to evolve. And I'm seeing a lot of the smaller concepts, with a lot of success. F45, is a tenant of ours. I go past their location. They're busy. They're cranking. Pure Bar we have, I think, in three different locations. They're doing well. So a lot of sort of the more micro, smaller, specialized fitness concepts, I think, are doing well right now. And it's not just because of COVID. I think it's because of innovation in terms of how they approach creating an experience for the customer. And I think that's what's important for any of these concepts as we move forward.
It's a great point. Also, I mean, I love fitness. I think one of the things that makes fitness so interesting is how it's gone from I have one thing I do in fitness to it's very reasonable to go to Planet Fitness and SoulCycle and somewhere else, and to have these multiple memberships that you use for different things as part of this fitness mix, which I think is absolutely fascinating. And I don't think it's something that we necessarily expected when we were looking at the data, a year or two ago. But one thing I do love, and Daniel, we'll start with you here, especially because this is going to give some real love to, Brian, you love this as well, to Target. There is this sense that wow, the strong are getting stronger. Walmart and Target, they're not only just the size. When we think about how nimble, how quick they are to adapt, how much they invest in innovation, how far ahead of the curve they are, this position of strength, they don't take it for granted. They really use it to kind of create more strength moving forward. If you're a smaller chain or a small business, how do you fight back in that type of concept? What do you have to utilize in that battle against the Targets and Walmarts of the world?
Is for Brian or for me?
This is for Daniel, for you.
Okay. I think it's really hard if you're any retailer to fight with the fight against Target. I think my advice would be to specialize in something that Target isn't selling. But I think the reality relates again to sort of customer experience, and it's actually really easy with technology, with third-party companies, for smaller retailers to be able to sort of customize their engagement with their customers, right, and sort of personalize it and develop the relationships that make it easy for someone to want to continue to go back. And I'm very big on technology and adoption of technology across the board, because when people are shopping, if they're not going to do e-commerce, they still want their life to be easy, right? Or Omnichannel was the big buzzword for a long time, but the reality is omnichannel is just a vehicle for customer engagement and creating a positive customer experience, right? So it's so cheap right now, it's so easy that you could have one location and you could be one restaurant, but you could use 7 rooms as your back office, architecture. You can use other apps, third-party delivery services. You can create an experience that's positive for the customer and that will want them to keep coming back. And I think that's really important for any retailer if they want to thrive and they want to exist and be profitable.
Isn't that local knowledge? When you're a smaller retailer, you understand your market intuitively, and that is a huge advantage in terms of being able to move quickly and understand how people feel in that market. It's a unique thing to leverage. I'm gonna move to the next slide only because we are running a little bit short on time. And Brian, I want to start with you here. When you think of the expanding role of these direct-to-consumer companies, and I use direct-to-consumer as not just digitally native, because I look at companies like Nike and Puma and even Lululemon in a similar vein of this owned retail experience, and you think about the entry of these brands into the mix. How significant of an impact do you think it will make on retail?
I don't know that it's going to be a huge, one watershed moment, right? It's been happening before the pandemic. It's going to continue to happen in the future. And again, like we talked about early on, all successful brands and retailers recognize that the more opportunities you have to touch your customers, the more opportunities you have to have those interaction points, the better you're going to be. And while a physical retail store may not mean what it meant 10 years ago, is it a showroom now? Is it there for customer service? There's a lot of studies coming out that's saying that the next big wave of retail is going to be, how do you handle returns from online, right? Are you using just the postal service, or are your physical locations going to be an opportunity for customers to come back and return or exchange a product? So the way they occupy space is going to continue to evolve as it always has, and they're going to create those more immersive customer experiences. But I don't know if it's going to just be a watershed moment. And I think we have to look at this and say, okay, is this something that was expedited by COVID, or was it something that was going to happen anyway? It's going to be studied for years, right? How that all happened. Are we ever going to return to placemaking and the role that these trendy concepts play in that? I think these are all questions that are still going to yet to be answered.
So it's interesting, and this is the first area, Brian. I'm gonna have to disagree with you. I don't know where the moment in time is. I think this is a watershed moment. It might be a year, like, you know what I mean? And like, I know that it's unfair to do that. And that was kind of your point. And I'm creating a straw man. But right. This idea, this entry of these brands into the market, I think it is you think of the confidence it gives to the wider sector of like Warby Parker, this digitally native brand that had been expanding so significantly. Allbirds, Everlane, Untuck name the brand. Yep. I think it's given I think everyone views brick and mortar a little bit differently, because if they're like, if these data savvy brands see it, oh, obviously it's there. I think it's a huge, I think that's what made it so exciting. And exactly what you talked about before also, how do we view the store differently? Is it just a showroom and a place to do returns? How does it support our logistics? I do think that these brands have done a big job of pushing that agenda and helping kind of the wider retail community embrace it as well.
And I think what legacy retailers are going to say is, yeah, no kidding. We already know this. Welcome to the party. Thanks for catching up. They've already been doing this all along, and it's we can kind of say, yeah, we told you so. And I think again, not to pit e-commerce retailers versus legacy brick and mortar retailers. They both learn from each other, right? And there is no longer I think a clear line between those e-commerce operators and traditional, because they both recognize and they learn from each other of what are the benefits of each other's base business. So and again, it's been happening, I think, for years, right? So we're
very good point.
So all it really is, Ethan and Brian, is if you have that loop, right, between e-commerce and physical presence, the DTC brands are just starting on the opposite side of the loop from where the physical retailers started from, right? But what happens is they can start their company with significantly less upfront capital costs. They can figure out what markets their customers are in. They can get that data analysis, as to sort of where the customers are interested in their product, and then they can once they've generated revenue, dedicate the physical capital to opening up the retail stores. And I was in Minneapolis last week for a day for work, and a friend of mine was touring me around the market, and he took me to a store which was amazing to see. It was a fashion apparel store, maybe 15 to 20,000 square feet in a cool little renovated building. Allbirds was next door, and the store only sold DTC brands. It wasn't just one brand. It was only DTC brands. And if I hadn't engaged in the conversation with the owner of the store, I would have had no clue, right? He had, Marine Layer, Flaherty, like a dozen of these brands that were all in there in different sections. People just walk in and think it's another fashion store, but that's what he specialized in, right? And it's those brands who didn't want to open up a store in Minneapolis, but wanted to have a presence. He sort of coexisted and created this relationship with them. So there's still a lot of opportunity for entrepreneurship and innovation, and sort of thinking about how sort of e-commerce and DTC can still have an impact in the physical realm. And we're absolutely going to continue to see it. I just think it allows brands to be smarter and more intelligent about where they invest their capital before they go through the process of physical expansion.
I completely agree. I also want to touch on something you said before that I think is really important to highlight. It's where the starting point was. And because so much of retail started physical and then went online, we got excited about things like social media followings and live streaming. Even though these are a very small piece of the puzzle, we got really excited about it. I think what's happening in reverse is these newer brands to the kind of the physical mix, they're highlighting things that I think retailers, either we in the retail real estate community, didn't highlight enough. What's the marketing value of a location? Not just the sales per square foot. What's the uplift that it gives to my e-commerce abilities? What does it do for my returns? What does it do for my delivery, for my engagement with customers? I think that is what's so significant, is it's given this lens on how incredibly important the store is. That's hard to have if it's your starting point, because you almost take it for granted because it's just part of the mix. And that's what makes me so excited about it. I'm going to skip one because we are only running really short on time, and I want to get to some of the great questions that have come in, but I do want to hit this because it's a concept that to me is super fascinating. This live, work, play idea. And what you're seeing in the graph is in the deck, is the Westfield Garden State Plaza in New Jersey, and the days of week and the time of day. And they had announced in about 2019 that they were going to be launching a lot of residential and office just around the Westfield Garden State Plaza, which is a major regional mall, obviously, in New Jersey. What was so fascinating was when you look at the mix of when their visitors come, they come in the evenings, they come on Saturdays. This idea of adding residential, adding office, brings that ongoing potential base who's going to come to this center, but it also speaks to the way the center's shifting, adding more food and beverage, adding more fitness to the mix. So you have this kind of holistic view of where you can bring people from and what you can provide them on an ongoing basis. I think it's a really fascinating concept. And Daniel, I'll start with you on this one. I think it's clear that the lines between retail, residential, and office real estate are blurring. How do you think retailers can best take advantage of that shift?
So how retailers can?
Yeah.
It sort of ties into my comment earlier about sort of, restaurant looking at daytime population and how do you identify it? I think it's sort of just, trying to, follow this, also continue conversation of what is a routine behavior, right? And how are the patterns shifting? I think we've been, our roots we were purely a shopping center company that's diversified pretty heavily over the past 10 years. And we now developed about 2,500 Class A apartments in that period of time. And a lot of it has been the belief that having multiple uses around a retail center only adds value to the center, right? Having more density, different types of people coming at different times of day only adds value, right? And we were never owners of large shopping malls attracting people from 45 minutes away. We've always been focused on sort of more pure play retail, grocery anchored shopping centers, and having more density in our submarkets only helps us, right? And so, communities survive by having multiple uses that can drive activities at different times of day, not just shopping centers. And so having that diversification of uses, I think, is really important.
That's a really interesting point. Brian, I want to ask you the same question. How do you see that shift? How do you see it impacting retail and retailers specifically?
Yeah, I mean, listen, the live, work, play, mixed use communities. I mean, that's a trend that's been going on for the last 10 years or so. And I think this is definitely one of those ones that COVID probably really accelerated, right? Where people were going to be changing their commuting patterns, didn't want to rely on public transportation for what, they were going to stay closer to home. So the more they can, go to the gym, get their groceries, go to a restaurant, and then be, right back at their home in a matter of time, I think is really, really important. I think, if you want to talk about practical things that retailers can do, and we've started to see them do a little bit of this, is things like easing up on use restrictions, right? Working with, owners of real estate to understand that, yeah, fitness is a good complementary use. Medical may be a good complementary use. And I can bring in, residential on an underutilized portion of a center. So I think, and retailers have started to really see this, that because they can get those customers on a around the clock basis, when there are those mix of uses, we've seen some folks start to really react positively to that, especially when you've got a center that could be facing, maybe it has an old Kmart in it, right? That just for whatever reason can't be filled. You got to look at alternative uses for that, because it's far better than letting it sit dark. And retailers are absolutely coming around on that point.
That's super interesting. I'm gonna skip already to the questions because we have a bunch and they're fantastic, and I want to make sure we get to as many of them as possible. Sure. Okay, so let's do you think, Broderick Adams asks, are DTC entities similar to low-cost airlines? The ID specific needs or routes via data and observation. That's a very interesting take. I like it. Daniel, you want to start with this one?
Yes, I saw this question pop up, and I love this. I love this observation because I had never thought of it that way, and I don't know what my gut reaction is, but it's a logical sort of analogy to make. Only if I would just take out sort of the low cost part, not to like influence that that means a DTC customer is a budget option, but more of just the reliance on data and observing customer behavior and then reacting and responding to it by being more nimble and flexible. I think absolutely it's a great analogy because they're not stuck with these legacy locations where they've signed a 10-year lease and it may not work, right? So again, it's about data analysis, right? And the big thing also is the next generation of entrepreneurs has all grown up with tech in their life in a pervasive manner. So they're not waking up when they're 20 years old saying, I want to go open up a brick and mortar store. They're saying, I want to create this technology brand that's going to be $1 billion company. And the end result ends up being that brick and mortar is sort of part of that pathway or that process. And so it's so important to embrace DTC to physical. Otherwise, we're not going to have new retail options out there, right?
It's also easier than ever before. Companies like Leap, Neighborhood Goods, they're making that transition to physical retail so much simpler, and I think it's having a huge impact. Brian, I want to go with you with this because this came right after your really smart point about the kind of the restaurants as the sector that really impressed you. And so should we place the restaurant resurgence on the thinning of the herd?
I think there's certainly potential for that, right? This is one of those things, and again, like we saw in 08, 09, or any of these market cycles, does a cataclysmic event like this just accelerate what would have happened anyway, or worse? I mean, do you have a concept that maybe just started right before the pandemic and didn't quite get wheels up before they had to really pull back? I don't know that we know the answer to that yet. I do think that more often than not, a company that is really going to be built to last will find a way to fight their way through this. So I think it's probably a little bit of a thinning of the herd, but the demand was always there. So as we head into this, the underlying economic conditions were still strong. And I think as soon as the regulations were lifted, we see that, we see the demand come, flying right back. So entrepreneurs are always going to do what they do. They're going to do entrepreneurial things. There's always be someone trying to build a better mousetrap and trying to fill those voids. So I do think that there is certainly some of that. And there's always been people nipping at their heels. So this is certainly something that COVID probably accelerated.
And then the last one I want to get to is, does the live, work, play model lend to more sports arena-based retail, hotel, office, and residential development, i.e. the Battery in Atlanta, Georgia? I don't know the Battery in Atlanta, Georgia, but maybe you guys do. But do you think it has to be centered? I think the interesting thing is, does it have to be centered around something that's really big in a regional pull, or can it kind of be created? Daniel, I'll start with you, and then Brian, I'd love to hear your thoughts on it as well.
Yeah, well, I'm flying to Atlanta on Tuesday for the night, so maybe I have to go check out the Battery. I haven't been there, but I think cities have been built on a live, work, play philosophy, since the beginning of urbanization, right? So you don't necessarily have to have one major catalyst, an arena or something of that scale. I think you just have to have critical mass and infrastructure where you have enough people driving the traffic across the uses, right? And you see, there's a while for a long, 15 years ago, every planner, every county wanted to create a town center, and they'd force retail on the bottom of multifamily projects. And you'd have 10,000 square feet of retail under multifamily project next to a 6-lane highway, and the retail couldn't get leased up because there's no critical mass, right? There's no environment, right? So the thing that has to be of a scale that's large enough to justify the diversity of uses in order for it to be economically viable.
I think that the sports angle is an interesting one, right? You've seen it happen in a number of places, Patriot Place in Foxborough, whatever Jerry Jones is doing in Dallas, where they can serve as an anchor for a project. But if you're anchoring around a football stadium, you've got 10 days a year where no one's going to want to be able to go there to shop, right? Because you're dealing with traffic just getting in and out of a game. So I think it is an interesting point. I think this is one of those things that will continue to be studied, right? Is placemaking going to come back as a concept, right? So that was the biggest trend heading into COVID, was creating places that were focused on the gathering of people, not necessarily for shopping, just to be, outdoor concerts in the park where they would happen to go get a coffee or go grab a beer or something afterwards. There's a project being built up in Westbrook, Maine called Rock Row that's anchored on an amphitheater concert venue. That was really just kind of created out of whole cloth, but as a place for people to gather, and it had ancillary retail around it. Are those going to come back? We don't know yet. I mean, if I were betting, I'd say based on what we've seen so far, people want to get back together. You go shopping right now, malls are crowded. People wearing masks, and they've learned how to figure it out. But it's not going to be the end of placemaking as we see it.
I agree with that point completely. You did break the one rule. We're not allowed to talk about the Patriots on this webinar in any way, shape, or form. We don't mention them as a team that exists. But I want to take a moment to thank Brian and Daniel. Thank you so much for being here, for sharing your expertise. This was, for me, just so much fun. And I think the ideas were really important and really kind of profound. And so thank you so much for joining us.
Thank you for having me.
And that is it for us. I don't know if Larry, you want to jump back in, or if we just want to say a hearty goodbye to everyone.
I am jumping back in. Thank you. And thank you, Ethan, Daniel, and Brian. Thank all of you for an excellent and informative discussion. And thank you as well to all of our viewers who tuned in this morning. Now, before we close out, please stay tuned for a final word from today's program sponsor, Placer AI.
These walls could talk. What would they say? With Placer AI, reveal the story of any location. Go ahead. Pick a location. Instantly generate actionable insights about retail properties. Whether you're analyzing an investment, maximizing leasing efforts, choosing the next location for your chain, or trying to understand how you stack up against the competition, Placer lets you see what is really happening offline. So, how does it work? We aggregate anonymized location data from millions of mobile devices and leverage the most advanced tools in AI, machine learning, and data science. This lets our team provide hundreds of large companies with the visibility they need to succeed offline. Get the full story at your fingertips.
If you enjoyed today's program, be sure to sign on to our event subscribers list and check out our Commercial Observer website and events page as we will be announcing our 2022 program and events lineup before the holidays. Thank you again, and have a great afternoon.